So we have a direct investment or co-investment philosophy which really permeates the DNA of the firm pretty much since the foundation of the firm. We have direct investing in Russia under our Russia partners, and the other fund-of-fund strategies that we pursue all have an allocation of between, I'd say, 30 to 40%, depending on the strategies, across all geographies. Specifically in Asia, or in our BRIC countries, if you want, we'll have a allocation, again, of 30%, and so far, we've been between 15 to 20%, more in the 15% range. I think private equity as an asset class by and large has actually done very, very well, and it's proven out to have outperformed significantly public equities. Depending on what sectors you take or what markets you take, the same is applicable in the US. We see the same observation in emerging markets. Going forward, we think that this trend will continue to show outperformance by a factor of 50%, if you want, again, compared to public markets, with better resilience, especially in downside scenarios, which we've seen in the global financial crisis. Now, that doesn't mean that they're all equally interesting areas. There are certain areas that are more attractive, where you have specific dislocations, if you want, in the distress space, so probably less credit-oriented at this point in time, but more idiosyncratic situations, or in smaller spaces, for example, where you have more imperfection, more information asymmetry, which allows you to generate better returns. So our small buyout space, for example, our small buyout program has performed very, very strongly. We expect that to continue because it's actually underserved by other competitors. So we'll do very well in that. And a similar logic really applies also for emerging markets. When you look at, there's a certain bifurcation of market. There's the large space, which is becoming somewhat more competitive. But there are certain areas, especially with smaller managers, if you look at deals in what we call tier 2 or tier 3 cities, that are being done at very attractive valuations and are continuing to show very high growth rates. And that's not just in China or Asia. But the same phenomenon really applies in other areas, such as Latin America, for example, or Central and Eastern Europe, if you want. So our BRIC focus on strategy emerging markets, if you want, generally speaking, is approximately a third of our business. It will continue to play a massive role and a very important role, and we'll continue to grow our business in those areas. BRIC specifically will remain a kind of dominant theme, if you want, also investment theme. However, we are increasingly seeing, as I mentioned, interesting opportunities outside of the BRICS, kind of the next inflection countries or growth countries, if you want. And we're actively scouting opportunities in areas, excuse me, or in geographies like Turkey, for example. We're looking at Africa. We're broadening our scope in Latin America, outside of Brazil, where we see interesting valuations also and very strong growth characteristics. So BRIC will remain the dominant kind of source, destination of capital, but will be augmented also by non-BRIC geographies as we go along. So our last product, for example, now will have an allocation of 20% to non-BRIC geographies, if you want. The way we've done well in Russia essentially is focusing on mostly the consumer space and also the private space. That's done very well for us, and it's a theme that we continue to see generating significant value appreciation potential. So we're looking at consumer, we're looking at healthcare, we're looking at business services, also financial services that have done very, very well for us. Most recently, if you want, at the beginning of this year, we very successfully listed a software engineering company called EPAM at the New York Stock Exchange. That company itself, that investment, was over 10x return for our fund. So we continue to see these high growth companies in Russia specifically, and those are the type of investments that we try to access. The difficulty in Russia is if you start to look at companies that are more affiliated with state sectors, if you want, or government sectors, then you'll have to navigate through a number of issues that we don't feel as comfortable with as others may. So we're actively trying to stay away from certain areas and concentrate on more the private sector, where we've done very well, and we think we continue to do well. The other thing which is interesting to observe in Russia is the tech space. Again, I mentioned we did very well with our recent tech floating on the New York Stock Exchange, but we see an increasing emergence of very, very interesting tech-related investments, also internet-related investments. And not just us, there are also other funds out there that are starting to identify interesting investment opportunities. You see the emergence of repeat entrepreneurs, very successful entrepreneurs also in that space, that are really at the very front of developmental capacities. And that's the space that we're also trying to actively invest in. No, we have actually deliberately not done that, because what we find is very important is to be able to tactically allocate capital and investments at any given point in time. The ability to essentially look at countries and compare countries from a relative value point of view and also investment opportunities has really been helpful and conducive to our returns. The luxury not to have to invest in any given country at any given point in time is one that we want to preserve, and that serves us very well. So for the time being, you will not see us create specific country funds, if you will.